Welcome to At the Market, a look ahead at Chicago area real estate. Brought to you by At Properties, the #1 brokerage firm in the region. Welcome everyone. I'm Peter Olesker. I'm here with At Properties co-founders Mike Golden and Thad Wong, and we are At the Market. Of course, At the Market these days means we are at home, and we are trying to deal with challenges that we never could have imagined. So today, at what would probably be the very peak of the spring home buying season, we're going to talk about COVID-19. We're going to talk about its impact on buyers and sellers and the market overall. And we're going to talk about what this means over the next few weeks, the next few months, and potentially the next couple of years. Welcome, guys. How you doing?
Overall, I'm doing pretty well, all things considered. More than anything else, I and we at Properties are incredibly grateful to particularly the people that are on the front lines of this fight and who are taking care of the sick and the people who are struggling with this disease. So more than anything, we want to say thank you to you. And the rest of us are hanging in there okay. We're grateful to where we are right now and hopeful that this is going to end soon and we're going to be able to pick up life again quickly.
I'll reiterate that. Fortunately, our family is safe and our family is healthy. We're aware that a lot of people aren't, and as importantly, the economic issues that are happening right now are terrifying for a number of people and a number of Americans. So we're very aware of that right now.
Yeah, I mean, this is a crisis on so many levels, and primarily it's a public health and a public safety crisis. So we can talk about the things that that At Properties is doing, that all real estate companies are doing right now to try and keep everybody safe, agents, clients, staff, et cetera. But, a lot of people might not know that real estate was deemed an essential business by Governor Pritzker and by the governors of Indiana, Wisconsin. Michigan is the only state where it is not an essential business right now, but we are working. So, Mike, what does that mean that we're an essential business?
Well, beyond food, obviously, shelter is an essential human need. So most states, thankfully, have deemed us an essential service. And while things have changed a lot of things are being done virtually, and businesses slowed down. We are still at work. We are still conducting business. There were many people that are in the middle of a transaction, buying a home, selling a home, renting a home, moving. That has continued, albeit at a slower pace. But it's been critically important that our sector continue to work. And we are still working. And we are still listing properties. We're still showing properties. A lot of times we're doing virtual showings with agents doing it online. We do still have live showings. Obviously, we've cut things back. Our offices are not open to the public any longer. We're not doing open houses, and we've taken every precaution to keep everyone as safe as possible. But thankfully, our business does continue.
Sure, Thad. On the topic of virtual showings, I wanted to ask you, how is our business changed over the last 4 weeks? We're doing a lot of things differently, and yet we're trying to keep things moving. So can you talk a little bit about that, about how our business has changed?
So we've been preparing for this for a long time, not necessarily for a pandemic, but operating virtually and investing in technology has been something we've been focused on to create efficiency both for the agent and the consumer. So virtual showings have been done for a number of years. We made an investment in a company called Real Vision that provides software, giving the opportunity for every listing to have unlimited photography, 360-degree walkthrough photos, and floor plans. We created our own videography department. We developed our own electronic document signing and integrated into our deal management system. We created a digital CMA so the agent and their consumers can connect virtually to look at the market and make notes. We created curbside closings with proper title. And about 8 years ago now, we developed the agent app, a company called Converse. Approximately 50 real estate companies are using it nationally, and it helped us with our internal communication, creating a much more efficient, streamlined way for our agents to communicate over the listings that we've got in-house and the agents that are representing buyers internally to help them find the house of their dreams. So everything really centered around communication and creating a virtual marketplace to market listings. So all that effort and energy that we've been putting in for the last 10, 15 years, we're now using all these things and now becoming essential to the part of the daily activities of an agent. And fortunately, we were able to not only develop some of these in-house, but we're able to partner with some strong startups so we can provide these to our agents right now in the time of crisis, helping them out, helping them our clients out, and getting properties closed when otherwise they might not be.
In a very practical sense, how might that play out for somebody, let's say somebody that's a seller or a buyer? What's the process that they're going through right now? Let's say somebody, they have to buy. What does that look like for them right now, or they have to sell?
Well, right now, buyers are getting to know all the properties they're looking for online. And the more information that you have describing a home, the fewer wasted showings you have. So in all reality, the first showing of any home is done online. The second showing is when a physical buyer comes to visit that home. That should be a home that they have significant interest in. And now, most importantly, that buyer has a significant interest because they're not wanting to go into that many homes. So as long as the home has great image online, you're getting some showings. And when those showings are accommodated, they're touchless showings. They're very clean. They're very sanitary, if you can't imagine. And we're still accommodating physical showings. Outside of that, which a physical showing is not necessary, but still to this day, we're not seeing a lot of virtual closings happen without buyers visiting the house. Aside from that one visit, the only other physical interaction that is essential is the inspection. Besides that, everything can be done online, everything can be done virtually, and it's created a really efficient process for people to get to the closing table.
Mike, anything to add there?
Only that, we as just to allude to what Thad has said, we've worked very hard over the last 10 plus years to develop this platform that allows us to do almost everything virtually. We don't believe that you're ever going to completely remove the human element from the process of buying a home. I think people are going to need to view homes, see them, but I do think that the technology today is now allowing people to whittle down their choices so they can make a much more quick and efficient decision. And obviously by necessity right now, because people want to be out as little as possible. So, the technology we've put together is definitely going to help continue to facilitate things in the time that we're in right now. And we'll probably modify how some people look for homes over the long haul. But we think that once the world gets back to a level of normalcy, you're still going to need that human interaction in order to make sure the deals get done properly.
All right. So there is a market right now, although the consensus seems to be that in the short term, we've got a really tough road ahead of us. So I wanted to ask you guys, what the short term, the next few weeks, the midterm, let's say through the end of the year, and then the long term, next couple of years looks like. And Mike, let's start with you. Talk about the next couple of weeks and what we're in for here.
So in the immediate term, there's bad news and there's good news. The bad news is everything is slowing down dramatically. So if you're a seller, you're getting far, far fewer showings on your property, which is probably stressing you out. It's going to take longer to sell in the short term because people just are not out and about. If you're a buyer, you have a lot less choices. While we are still listing properties, we are definitely listing a lot less right now than we would be at this time of year normally. So, this would be the heat of the spring market, as you alluded to earlier, and it's definitely a much slower time. So, the bad news is we're all going to have to ride this out a little bit and just be a little patient until we get control of the virus and we start to see us flatten the curve and we can start getting back to some normalcy in life. The good news is that our government, which has traditionally been incredibly slow moving, is moving at a pace like we've never seen before. The stimulus package that's been introduced, passed, and is already being implemented is moving at lightning speed, and that is going to shore things up tremendously. It's going to allow people to stay in their homes, to afford their mortgages or their rents, to pay their bills, and really make a massive impact, we think, on shoring up the economy in this short-term tough period of time.
Thad, I'm going to make you do the hard work here because I think short-term we all kind of realize what we're in for. Long term, maybe we are a little bit more positive, but over the course of the rest of the year, let's say we're bunkered down for another 30 or 45 days, then things start to move. We get to go back to work. Kids hopefully are back in school and back doing their activities, and sellers are opening up their homes to buyers. What does the real estate market look like through the end of this year, once things start moving again?
So I think everybody knows there's going to be a psychological impact and a behavioral impact of COVID-19. That being said, I think there will be a lot of pent-up energy to move on and move forward with life. I do agree with the stimulus, and it's going to be incredibly impactful showing up our economy. We're yet to know and understand the length of some of the unemployment. With that being said, I think that stimulus is going to really create a sense of urgency for a lot of people. And I also think the appreciation for the home has never been greater than it is right now. While people are spending so much time in their home and so much time in their kitchen, the desire to upgrade, update, get a big backyard will be there. So I am very bullish, especially in Chicago. It's, there's no such thing as a national housing market. Things are very supply and demand driven locally. And Chicago has a ton of corporations still moving into the city. And we are doing well as a city. So I think that combined with the government's help is going to get us out of this rather quickly. I don't think it's too much of an optimistic lens. And I do think pricing is going to continue to rise. You have to remember that it's counterintuitive, but recessions are rarely bad for the housing market. In almost all recessions, aside from obviously '07, which was generated by the housing market, we've seen prices rise as GDP has fallen. So I am very bullish for our housing market. I think hard assets, which obviously real estate is the most focused hard asset, will be one of the things that gets invested in the heaviest over the next 12 to 24 months.
Okay, so kind of dipping into that long term a little bit more, but Mike, if you could elaborate on that, what do you see? I mean, it's hard to look past the next minute or the next headline or the next email, but maybe you spent a little bit of time thinking about what things could look like, a year and a half or 2 years down the road. Where do you see things headed?
So, as that stated, we are both, and as a company, very bullish about the real estate market overall for the long haul. If you look at the market fundamentals, particularly in the last recession, the Great Recession, obviously housing kind of brought us into the recession. So we created and caused it. Traditionally, housing brings people out of downturns or recessions, and housing usually appreciates in downturns and recessions. So we feel like, given the foundation of the market right now and the fundamentals, we are in a very, very good position for not only for housing to take us out, but for us to see growth in price and in new construction. If you look at the market where we sit now versus 2008, first of all, we're not an overvalued market. We didn't see the price spikes, the overexuberance, the pushing up of values because of investors that we saw in 2008. We also have equity in homes at all-time highs, where if you look back to 2008, 2009, equity was being used as just funny money to buy fun things. So you had people taking out home equity loans or refinancing their homes to buy everything from a TV to a Porsche. And that just hasn't happened now. Because we have so much equity in our homes, things are much more stable. And then bottom line, we are an underbuilt market right now. The last stats we have are from 2018, but in 2018, 1.2 million homes were created, new households were created, and only 860,000 homes were actually built. So there's a 340,000 home delta that were not created for the new households that were created. At some point, that demand is going to have to catch up, and supply is going to jump in. So we're going to have an opportunity, I think, to see more homes created and a housing market that continues to drive things forward.
Don't forget about the millennials. They're very unpredictable, it's true, and nobody likes to bet on them. But they just spent a month in their one-bedroom apartment or their studio with their partner or with their spouse, and I would say that they are seeking some permanence and some more space. So I think finally, one silver lining of the pandemic, not worth it by any means, but it will be millennials are going to stop renting and start buying. They'll start understanding what it feels like to build equity. They'll start enjoying what it feels like to own a home and have a sense of permanence in a community. So I'm betting heavily on millennium participation in the next buying wave.
I am as well. And because I feel like, especially the millennials that are still in their parents' basement, they definitely want to get the heck out right now.
I think it's hard to give advice right now, of course. I think the natural instinct for our agents is to sit back, is to listen, is to be a resource of information and let people proceed on their own timeline right now. But if I am a buyer or I am a seller, what advice would you give me right now? Maybe let's start with buyers. Let's say I was in the market 3 weeks ago and I was working with an agent and I was going to open houses and I was ready to pull the trigger on something this spring and move in this summer. What do you tell that buyer right now? Mike, let's start with you.
Sure, Peter. So I think that's a very individual decision right now, and it's very dependent on your personal situation. First off, obviously, if you've been laid off or furloughed or you're concerned about your job, you may want to take a step back and wait and let the dust settle down. And I think everyone would completely understand that. However, if your job situation is solid and you feel comfortable, I would say it's still a great time to move forward. Obviously, sellers are more motivated right now, particularly the ones that are on the market. So it's a great time to jump in. Interest rates are incredibly low, historically low, rates we never thought we'd see. We said that before in our a couple of years ago, but now they're even lower and a great time to buy. So if you're a buyer out there and you're ready to pull the trigger, I still think it's a great time to pull the trigger. We do feel that there'll be price appreciation once the dust settles, not in the next couple of weeks or couple of months, but over the next few years. And buying now is a great time.
Okay. Thad, sellers. Let's say I listed my home a month ago. I was doing open houses. Now, what the choice is, do I stay active or do I pull up stakes and come back, when this thing is over? You've been an advocate for staying the course. Do you still agree with that?
Do you know what you can't do if you're not on the market, Peter?
What's that?
You can't sell your home. And so nothing ever gets sold, and you can't even garner any interest if you're invisible. So people that are pulling their home off the market, unless they're pulling home off the market to improve it, to reopen it up to the market and reintroduce it, a new improved property, it's silly to take it off the market right now. Buyers are getting excited about seeing specific homes now. Buyers are getting in their car and they're driving by homes that are on the market that they can't get into now. They're walking their dogs by the homes and they're trying to get as much information as possible. They're reaching out to their agent. And guess what? When that buyer is finally comfortable walking through that home, they've built up this sense of urgency and excitement to be there. And as long as it meets the majority of their requirements, they're going to put in an offer.
So final thoughts, Mike?
Well, listen, we don't want to in any way minimize the impact of this tragedy on all of us personally. It's a very tough time, and we are incredibly, like I said earlier, grateful for the people that are on the front lines, and we have an incredible amount of sympathy for the people who are suffering and who have lost loved ones. But the good news for us is that life will go on. Our world will recover. We are an incredibly resilient people, and we are going to see a great rebound when this is all over. And, for us, from a business standpoint, we just want to be ready to service you, to make sure we can take care of you, and to kind of help you get through it until we get there.
Thad?
Yeah, there are so many things pointing to a positive real estate market in the coming years. Never has housing been more important since the shelter in place. I think the government did a great job with the PPP and the CARES. I think the preservation of jobs is a big deal because those people with stable jobs that have retained their jobs are going to be buying homes. And there's going to be a big focus on investing in hard assets. And there's no harder asset than a home and in real estate. So I believe a lot of wealth will be created over the next 2 decades in home ownership. I also see very few things that are playing a downward trend towards the likelihood of home ownership growth and appreciation. The lowest interest rates ever, and a ton of equity we have in our homes right now. So I am incredibly bullish on the housing market, significantly more bullish than before. I think that this is one of the greatest opportunities that will be created. And I think that the change in psychology and the importance of a home and what a home means to a family and what a home means to you personally and how you use that asset has been changed over the past few weeks and the next couple of weeks. People are going to view their home in a much different light than they had in the past, and its value from that psychological impact alone will increase.
All right, guys, good stuff. Let's do this again soon. I think people are looking for information, they're looking for answers. I know our agents have never communicated more with their clients than right now. So let's just keep the conversation going and stay safe, stay tuned, and we'll see you soon.
Thanks, Peter. Appreciate it. Looking forward to actually doing this live with you next time, hopefully.
Let's hope so.
Probably
nice
not.
to see you, Peter.
Great to see you guys. Thank you.
Take care.